Good morning, everyone. It's time to call the meeting to order for the Post Falls Urban Renewal Commission. It's January 19th, 2017. Director Fountain, would you please call the roll?
Baltzell.
Here.
Carstensen.
Here.
Crosby.
Here.
Hauser.
Here.
Coles.
Here.
Davis. Here. And Commissioner Malzahn has an excused absence.
Okay, thank you very much. And Commissioner Coles will lead us in the Pledge of Allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you all very much, and welcome to our guests to the 2017. Under ceremonies, appointments, and announcements, I just have a couple to comment on for the audience that's watching on television. Two of our commissioners have been reappointed by the council and the mayor for an additional 5-year term. That would be Commissioner Carstensen and Commissioner Davis. So welcome to you, all of you. We have elected our officers for the coming year. Last week at our workshop, I was reelected as chairman, Commissioner Carstensen as vice chairman, and Commissioner Crosby as our treasurer. So that will be how we'll move forward this year. And now for conflict disclosures, does anyone on the commission have any conflicts to disclose regarding anything that's on our agenda this morning? There being none, let's move into the consent calendar, please.
Good morning, Chairman Baltzell and Commissioners. Item A in the consent calendar is the Commission meeting minutes of December 15th, 2016. Item B is the Finance and Policy Committee minutes of January 3rd, 2017. Item C is the Commission workshop minutes of January 11th. Item D is the payables for this month totaling $11,638.29. Item E is the bank activity report, which shows total in all funds of $2,977,298.20 and accrued interest for the month of $3,102.95. Item F is the financial reports as of December 31st, which will be posted to our website as usual. Item G is Resolution 2017-01, authorizing the destruction of certain agency records per Policy 21, which is our records retention schedule. Your approval of the consent calendar will authorize the transfer of $3,102.95 accrued interest to the general fund and transfer to the Community First checking account $11,638.29 for general payables. I would answer any questions.
Okay. Are there any questions, commissioners, of anything on the consent calendar? Okay, roll call vote.
Baltzell?
Voice okay?
Mr. Chairman,
I guess we should have a motion first. Yeah,
so.
very good.
Move to approve the consent calendar. Second.
Moved and seconded. Any further discussion? Okay. Now.
Baltzell?
Aye.
Carstensen?
Aye.
Crosby?
Aye.
Hauser?
Aye.
Coles?
Aye.
Davis? Aye.
Okay, motion carried. Committee updates. Finance and Policy. Commissioner Crosby?
Commissioner Hauser reviewed the financials for December and rendered an opinion that everything was done well. The committee met and reviewed the audit, and we also worked with the director to finalize the management letter, which precedes the audit. So we had a busy month.
Very good, thank you. District Review. Commissioner Coles?
I have nothing this morning.
Okay. Commissioner Carstensen, Communications, Property, and Personnel.
Only that executive director got moved into the new office. If you haven't seen it, you need to go over there. It really looks nice. And I think it's going to be much more effective and efficient than it was with the other two
Cubby holes.
cubby holes, yeah, so.
Very good. Yeah, it does look very nice, and thanks to your husband for all the work that he did in helping make that happen for you. So.
Yeah, I love it. Thank you.
Okay, excellent. Citizen comments. Any of the citizens that are with us today? The agenda is reserved for citizens wishing to address the commission regarding an agency-related issue. Comments related to future public hearings should be held for that public hearing, but persons wishing to speak will have 5 minutes. Is anyone in the audience other than you? We're going to hear from you. Anything you'd like to comment on, or, okay, very good. Unfinished business. Not aware of any unfinished business. New business, under that would be the fiscal year 2016 audit presentation. Annie Van Valen from Anderson Brothers CPA will present the review.
Okay. Well, thanks for having me today to present. My name's Annie Van Valen, and I work with Anderson Brothers CPAs, and I'm here to present the Post Falls Urban Renewal Agency financial audit for September 30th, 2016. So we'll just jump right in. So the financial statements are broken up in different departments. So we have our independent auditor's report, and then management discussion analysis. This is presented by the district, providing a lot more information and background, just regarding projects and comparisons between years that the basic financial statements do not have. The basic financial statements are broken up in two sections. You have your government-wide financial statement, which is full accrual, includes capital assets, debt, that sort of thing, and then you have your fund financial statements, which is more on the fiscal responsibility of the agency. And so you'll have the principal payments, that sort of thing, listed as actual expenditures. And then you have the notes of the financial statements, and then the required supplementary information. Percy has one portion of it that we'll look at, and then you have your budget comparison to actual results and the note regarding that statement. And then the last part is the internal control report that we present. And the point of the financial audit is obviously we're looking at the financial data, but as we are using or going through our audit procedures, if we do identify different procedural issues or things, we have 3 tiers. One's material weakness, a significant issue that we need to address and communicate. Then you have the significant deficiency, still something we should communicate, written, verbal, all of that, of just recommendations of improvement in areas just to review. Yeah. And then you have control deficiencies. A lot of these will be just little errors, more isolated cases. And so if it is a significant deficiency or a material weakness, this is something we would put into this report and communicate with you our recommendations for changes and get comments from you. For this year, there weren't any significant or material weaknesses addressed during our audit procedures for this fiscal year. Just a summary of everything. So I'm more just going to jump right into the basic financial statements and discuss that. Okay, so the statement of net position, this is again the government-wide financial statement on the full accrual basis. It's broken up in 5 different departments. So you have total assets, deferred outflows of resources, liabilities, deferred inflows of resources, and then the net position. I'm sorry, this is on page 9. And so total assets for the agency is $3,387,962. Majority of this is made up in investments, CDs, reserved amount due to the debt that the agency has. And then the deferred outflows of resources and deferred inflows of resources, this is something new in the last few years. This is more, so deferred outflows of resources is similar to an asset, but out of management's, and in this case, Percy's control of when they're receiving that. And so there's just some temporary differences, and that's where it would be categorized in that section. Deferred inflows of resources would be similar to like a liability, but again, out of management's control, or in this case, Percy's as well. And so the big differences, and this was more effective in last year that I addressed, but GASB 68, that's been substantial to most governments. It's the portion of Percy and what the district or agency contributes to Percy. They get an allocation factor from that amount, and then you take the entire Percy fund and apply your allocation factor, and then it comes through as transparency onto the agency's financial statement. So it's kind of a phantom number for the agency as far as nothing's due to the agency, nothing's paid out by the agency in the future. It's more just that transparency of how's Percy doing and presenting that data, and we'll get into it a little bit further as far as what Percy is and what they ended with. Any questions on this page? And so this is the statement of activities. Let's see if I can zoom. And then as you can see, majority of the revenue stream is property taxes, and then the costs associated or the expenses are going to be mostly going out to those districts. And we'll have other financial statements to identify that. So the balance sheet, the biggest difference here is you don't have the Percy information. That's for the government-wide financial statements. And so here we have just total assets, the $3,387,800. Again, majority in bank accounts and CDs and other investments. And then accounts payable is majority of the total liability, $622,100. And then deferred inflows of resources. This is the property taxes that have not been collected as of September 30th, 2016. And you have a 60-day window there for collection. And then fund equity, and this is a GASB 54 segregation that applied probably about 4 or 5 years ago. But this is where you take your fund equity, what's left over, and then assign it or classify it into different categories. So for the agency, if there are collections of property taxes that maybe occurred in September, for example, that had not been paid out to maybe those related proponents, that's where this would be assigned or committed depending on if there is a commitment level there or if it's just assigned to that district. Yes, Len?
Yeah, I had a question. What is the difference between the two asset accounts of property tax receivable and unavailable revenue property taxes? Is the receivable on accrual based on last year's property tax revenue?
Yeah, so the property tax receivable, and this is based on county information of what's been assessed within the district and what has not been collected as of September 30th, 2016. The difference between those two numbers, which is, let me see, the 184,000 versus the 174,000 is you have a 60-day window after fiscal year end for what's actually recorded in this fiscal year. So these are based on collections in October and collections in November for property taxes. And that is actually taken off of and recorded as revenue in the fiscal year. So the leftover after that 60-day window is now deferred. So there was, according to these numbers, there's roughly about 10,000 of collections that came in October and November 2016.
I see. Thank you.
Yes. So moving back to fund equity, and just in case there were any questions here, this is leftover. It's classified into non-spendable, meaning it's already been spent. And then you have restricted based on debt covenants, and then commitments to each of those proponents, and then assignments to those specific districts that may not have the proponent requirements. And then the rest of it's unassigned or for general fund purposes. And then the bottom half of this schedule, and let's zoom in just a little bit more. So the bottom half of this schedule is your reconciliation between this page and page 9 of the statement of net position, so you can see what those differences are in comparison. So next page is the statement of revenues, expenditures, and changes in fund balances. Again, majority of the agency's revenue streams going to be property taxes. And then the penalties and late fees, this is also related to the property taxes, just not knowing the timing of it, and the property tax or property owner late payments equals penalties and interest as well when they start paying those in. And then the interest investment earnings from CDs and savings accounts. And then 1.2, because this is a difference between the government-wide full accrual basis and the fund, which we call the modified accrual basis, is your other financing sources, is what's been drawn out from debts. So that's paid for other expenses, but what's not necessarily been paid out by the district's cash, but pulled out from debt. So drawdowns, that sort of thing. So that's the amount here is the $4.5 million that was pulled to pay for the additional expenses with mostly associated with Greens Ferry. And then again, here on page 13, this is the reconciliation between just this last page and the statement of activities, which was page 10. And just those differences, majority of it being Percy and then debt issuance. Okay, so then the next pages are just the notes to the financial statements. These are providing a lot more detail on the accounting policies, details in cash policies, what's in capital assets, for example, even though it's very small. I think it's just office equipment. And then the long-term obligations and commitments, those details and what the payment schedule and future payments for debt. And then the last few pages are regarding Percy. So I just wanted to discuss Percy. Their financial or their fiscal year end is June 30th, 2016. So it is a little bit different from the agencies. But for 2016, they had a great year until June. If you remember June with the market, they had Brexit, the market dipped, and then their fiscal year ended. So due to the timing of that, their numbers came out less than what they wanted to see. And because of that, too, they also dropped further that they had to propose an increase in contribution rates just due to the level that they dropped. It did correct itself. We still have to see again for the rest of the year what it looks like, but just so you know, there is a proposal to increase contribution rates. They have this to go into effect July 1st if they do approve this. I'm not aware yet what those rates are, but it's something where you can look on their website. Is very helpful, provides all the information, has the audits listed, the actuary reports, just a lot of information. But just so you know, that is something that's come down due to the results of their fiscal year end for 2016. But again, if there is an increase for contribution rates, this would be something that's effective in actually 2018. So there's a little bit of room there to plan ahead. I don't think it's something that would be detrimental to the agency at this point, but just something that you are aware of. And so as you can see with this schedule, this is the required supplementary information. Right in the middle, the 87% here under the 93016, that's the Percy, what they're funded. So as of June 30th, 2016, they were funded 87%, even with their bad results right in that month for the market and that sort of thing. So just so you knew, if everybody happened to quit June 30th or July 1st, everybody that's been in Percy, 87% of it was funded at that point. So it's not bad compared to some of the other state plans. So Percy's still doing very well, but last year at this point they had 91.38% funded, and it did drop. Any questions at all? I would recommend, if there are any Percy specific questions, to definitely ask them. They're very helpful, and even their website provides a lot of information. Okay. So the next page, this is the schedule of revenues and expenditures and changes in fund balance, but the budget to actual comparison. And so we have the original budget, final budget, if it's been amended, which it has been, and then comparing that to the actual. Overall, for compliance purposes, we're looking at the total expenditures out, making sure that you're compliant with state statutes, that you haven't overspent what was budgeted for spending. So the final budget for total expenditures was $10,379,715, and actual expenditures were $8,022,938. So you were under that amount. So for that state statute, you're compliant. So this just gives a little overview. Revenues or property taxes were higher than expected when budgeted. And the next page, just the note to that schedule. And then this is our internal controls, and as I mentioned right at the very start, we did not identify any non-compliance that would be considered significant in any way, and then any material weaknesses or significant deficiencies during our audit procedures this fiscal year. Any questions?
I don't see any questions, at least on my part, other than knowing that we went through a transition between our executive director and now our interim director. I think it's been a smooth and appropriate transition that way. It's not the president, but it's darn close to it, and we're doing it better. But I think that's a kudos to our interim executive director and to our finance and policy committee that helps oversee that. And I think that makes it really nice, and we can be very proud of that type of activity taking place. It hasn't always been that way, but the last number of years it's been really good. So thank you for the work you do. Does anybody have any questions or comments you'd like to make? Lynn?
My only comment, is that in addition to what you just pointed out about our we being on budget or under budget, our operating expenses were $35,000 or $40,000 less than we had projected also. So, that's always good for a governmental agency to say.
Right. Anybody else? Comments? No? Okay, thank you,
All right,
Annie.
thank you.
Appreciate it very much.
Six digits.
Okay, staff report and updates.
Mr. Chairman,
Oh,
we probably need a motion to accept the
to
audit.
accept the audit, okay.
I'd make a motion to accept the audit report for 2016.
Second.
Okay, it's been moved and seconded. Any further discussion? Roll call vote?
Voice vote's fine.
Okay. All in favor, say aye.
Aye.
Opposed, same sign. Motion carried. It is approved. Thank you. Thanks for the reminder. Okay, now we can hit the staff report and updates.
Thank you. Gary Burton from Watson and Associates has informed me that they have their financing in place, and they have entered into contracts for the extension of Creative Way, and they're working with the city and waiting for the weather to change so they can begin construction on that. So that's good news. I received a letter on January 16th from the Idaho State Tax Commission regarding the Urban Renewal Central Registry. In 2016, legislation passed House Bill 606AA, which created Idaho Code 50-2913. It requires each urban renewal agency to provide administrative and financial information to a central registry which is maintained by the State Tax Commission. The plan for each urban renewal district must be submitted to the central registry prior to March 1st, 2017. And I sent the links of all of our district plans to Gary Howd yesterday, and any further modifications or amendments to plans will have to be submitted at that time. So audits and budgets are submitted to the LSO, and we've been doing that since fiscal year 2015.
Okay.
And that's the State Tax Commission. They're the repository for all that information.
Yes.
Right, that's pursuant to the legislation, yeah. Thank you.
Right. And in the future, any new districts, do they have to be included in the process for developing a district, or just to get a copy when they're done?
Just a copy when
Just
the city council approves the
When the
plan
district's
and
approved.
creates a district, yes.
Okay, thank you.
Yep.
Okay. Any other questions of Diane? Okay.
Yes. Just one question. In your discussions with Mr. Burton, was there any discussion about the lift station?
No.
No.
Probably you should also indicate that Mr. Burton is part of the Expo
Expo, yeah.
District. This is for clarity.
Okay.
Thank you. Okay, very good. Commissioner comments? Any comments from our commissioners before we move on to next month? We're going to have a couple of commissioners absent over the next month to month and a half, but I believe we'll have enough here for a quorum, so I don't anticipate any issues that way. No comments from any of you? Okay, I guess I don't have anything new myself to say that hasn't already been said, other than, again, I continue to appreciate the work that our staff and our attorney does, and the work that all of you do in support of urban renewal for the city of Post Falls. So thank you all for that. And with that, I'll entertain a motion to adjourn.
So moved.
Second? Okay, all in favor say aye.
Aye.
Opposed, same sign. Motion carried. We are adjourned.